Welcome to the Valuaris video tutorials. In part 1 we talk about the organization of the Valuaris discounted cash flow model. Before we get started, let's briefly talk about the features of the model. Save substantially compared to an external valuation. Get support for your model-related questions. The model was developed fully in compliance with the fast modeling standard. It's very easy and quick to set up, and it comes with some powerful add-ons like scenario analysis, sensitivity tables, and extensive documentation. In line with the FAST standard, the model is organized in 4 main sections: the control section, the input section, the calculation section, and the presentation section. In addition, we have an introduction section with a step-by-step guide to set up the model. And we also have an appendix where you find 2 templates if you want to create new sheets and the FAST standard rules. The introduction section helps you to set up the model. First, it shows the minimum data requirement. Basically, you need a balance sheet, a business plan, and an assumption on the cost of capital. This section also contains a step-by-step guide to set up the model. In total, there are 26 steps, 8 steps to insert data, 7 steps to carry out a review of your valuation, and 12 steps to make some minor layout adjustments. The process is very efficient to set up your valuation model, to review your assumptions, and to present it in a nice and professional way. And as a result, you will have a state-of-the-art business valuation. The first main section is the control section. Here you learn the organization of the model by flowcharts, etc. And you can also control that the model works properly and no errors are in the model. The next section is the input section. Here you insert your data and your assumptions. Once you have completed this section, you are almost done. Basically, there are only 2 sheets to insert data. One for constant data, which does not change over time, and one for time series, which changes from year to year. You also determine the time rulers and flex, which is done automatically, and you can insert the assumptions for up to 3 different scenarios. The core of the valuation model is the calculation section. On the DCF sheet, the enterprise value and the equity value are determined. The DCF calculation is based on the input data as well as the results of the net working capital, the peer group, and the cost of capital analysis. The calculation is not only done on a company level, but also on a per share basis. Here the diluted and undiluted value per share are determined. Finally, in this section, the key statistics are calculated, like ratios for income statement and balance sheet, and up to 3 different scenarios are calculated in parallel. The last main section of the model is the presentation section. Here you will find the results of the discounted cash flow calculation in a condensed way. While the previous worksheets are only focused on the calculation, the presentation slides should both summarize the results and also look professional. This section is therefore ready to be printed, and it can be presented to a board, for example. You only have to make some minor layout adjustments. That was the short introduction to our model. We hope that you got a good impression of our tool. Thank you for your attention. Please visit us on valuaris.ch.